Hi folks, hope you all are doing well. I'm Karan Bandal from Econosite, your weekly wrap on economic news from India and around the world. So let's get started with a global case. Global growth forecast for 2023 does not inspire. These forecast numbers are from the IMF, first released in October 22 and now revised in January 23. The world economy is projected to see a 2.9% growth rate this year. Overall, growth numbers for almost all the major economies have been revised upwards. That's good. But look at the numbers, they are not at all impressive. In North America, US, Mexico and Canada will grow at around 1.5%. A major South American economy of Brazil at 1.2%. In Europe, Norway, Iceland and Ireland are expected to excel and may grow at more than 2.5%. UK continues to struggle post-Brexit. Its economy is expected to shrink by 0.6%. Rest of the European numbers look bleak, as expected since the region is directly affected by Russia-Ukraine war and the resulting high energy prices. African region seems okay with its largest economy, Nigeria, expected to grow at 3.2%. In Asia, India leads with 6.1% expected growth, China at 5.2% as it reopens after scrapping zero COVID. Australia and New Zealand at less than 2%. Overall, not a very promising outlook. We'll keep checking periodically how these forecasts hold up against the actual numbers that will unfold. Now from nations, let's go to a company with the largest market capitalization in the world. Apple misses on earnings and revenues. Remember, we have been talking about China's zero COVID policy and how it led to crippling supply chain disruptions. Well, companies like Apple that depend heavily on Chinese manufacturing were hit particularly hard. Apple closed 2022 with a rare double miss on estimates. Look at this table. Earnings per share, revenue, both came in below expectations. Both fell heavily on an annual basis as well. Revenue for their crown jewel iPhone declined 8%. This decline was a direct result of supply chain issues caused by China's zero COVID policy. Companies will act when their bottom line gets hit, and that's why we see a major push to diversify away from China by companies like Apple. Let's go to India. Growth, a key tool for fiscal consolidation or fiscal discipline. As you all know, on February 1st, 2023, India released its full year budget for the fiscal year ending on March 2024. Finance Minister Nirmala Sitharaman laid out a plan to keep the growth momentum going while maintaining fiscal discipline. Focus on the fiscal discipline part. We measure fiscal discipline by looking at a particular economic indicator, fiscal deficit. Fiscal deficit is basically the gap between government's income and its spending. It is usually measured as a percentage of a nation's GDP. Look at the past 10 years of data on India's fiscal deficit. It was on a downward trend, meaning government was still spending more than it brought in, but the magnitude of spending over its income was reducing. Then COVID pandemic hit, now all bets were off. Governments around the world needed to spend money way beyond their means to make sure people don't go hungry, they get adequate healthcare, vaccinations. Governments provided loans or grants to small companies so that they don't go completely out of business. All this at a time when people weren't working due to government mandated lockdowns. That meant a significant portion of working age population wasn't earning a paycheck, resulting in a collapse of government's tax revenue. Falling tax revenue and ballooning welfare spending meant fiscal deficits skyrocketed around the world. In India, a similar script played out. What India did differently, however, after making sure no one goes hungry and without vaccination, Indian government spent heavily on capital expenditure instead of issuing stimulus checks. And that capex momentum still continues. Look at the last 2 years. As India recovered from the human and fiscal damage inflicted by the pandemic, India's fiscal discipline is returning. Fiscal deficit is reverting to normalcy. Center has provided a glide path for fiscal discipline where they are targeting fiscal deficit at 4.5% of GDP by financial year 2026. But global rating agencies Moody's and Fitch are skeptical and are voicing concerns. They may have a point, as going from 6.4% to 4.5% in just 3 years is quite hard. But the finance ministry seems confident. They state that this year government has allocated a record 10 lakh crore rupees or roughly $120 billion for capex, 37% higher than the last year. This should bring in more private capex and sustain recovery, growth. And as GDP expands, denominator will continue to get bigger, bringing India closer to a 4.5% deficit target in 3 years' time. Let's end with an update from India's public sector. India's biggest copter production unit, Hindustan Aeronautics Limited or HAL, has inaugurated India's biggest helicopter manufacturing facility on February 6, 2023. The factory is spread over 615 acres and is located at Tumakuru in the state of Karnataka. This unit will be able to produce light utility helicopters, light combat helicopters, and Indian multi-role helicopters, all indigenously designed and developed in India. It will also be used for MRO operations, that is maintenance, repair and overhaul of military and civilian use helicopters. Authorities state that the facility will initially produce 30 copters per year to be raised to 60 and then 90 in a phased manner. In terms of economic impact, this unit will provide employment for around 6,000 people in the region. HAL plans to produce more than 1,000 helicopters with varying load carrying capacities over the next 20 years, making India completely self-reliant for its helicopter needs. This will generate a total business of over 4 lakh crore rupees or roughly $48 billion over the next 2 decades with export potential as well. So the global economic outlook remains weak, which will affect India's growth potential. India needs a solid 7-8% plus growth rate for multiple decades to fully capture its demographic dividend, pull people out of poverty and catch up with the Asian tigers in the region. India needs its global partners to be in good economic health. As far as what is in India's control, I think the government is doing a decent job so far, spending on capex to spur growth and balancing social welfare spending with fiscal discipline. I hope you found this week's wrap interesting. I'll speak with you again next week. Until then, take care.